Name of Allah who is most beneficent and most merciful. Assalamu alaikum, dear students. In today's lecture of risk management, we will be learn about the different type of risk. As you know, there are two types of risk. There are two types of risk. Number one is financial risk, and number second is non-financial risk. As the word financial describe, it's belong your monetary related issues like financials. It denote that it is a monetary related issues. But on the other hand, the non-financial risk include non-monetary issues. Non-monetary issues. For example, your regulatory, reputational, etc. Now, today we will be discussed in detail about the financial risk. There are some types of financial risk. As you know, these are related to your monetary related issues. And there are some types of a financial risk that are included: credit risk, market risk, number third, liquidity risk. Basically, these are three types of financial risk that a company or business is encountered while during their operations in running their businesses. First, we will be discussed about the credit risk. As the word credit denotes that it is related to your credit. As you know that every business, whether it's a small business or it's a large scale business, it has encountered some of financial obligations, means it have a financial shortage, so he make her purchase or procurement on a credit basis, whether it's a small business or a large business. So credit risk is always there. Like if bank give credit to some company, it become it can be become her normal loss or abnormal loss. Like if a company doesn't pay her credit to the bank, for bank it become a bad debt. For company, the credit that he has not been paid to the bank considered it a bad risk. But if the limit of bad debt increased, it will be become a abnormal loss. The amount of bad debt increase, it will be become your abnormal loss. So credit risk is always there, and every companies have encountered with the credit risk. If he has not been paid the credit within a specified time limit, then the companies is become unable to getting the risk, to getting the credit on time. Okay. And our second risk, it is a market risk. The market risk include, like in a market there's some sources like interest rate, your foreign exchange, and your price. These are biggest factor that bring a risk in your market. So there are some sources of a market risk that are include your commodity price risk, your interest rate risk, in number third, your foreign exchange risk. These are some sort of a risk that bring risk in your market, and we can say that these are a market risk. Now we will be discuss our third type of a liquidity risk. As you know that what is liquidity? The money in your pocket is your liquidity, and you have a reputation means that you have a money. But if a company have not having enough money, like her liquidity ratio is low, means that its credibility will be a low. Definitely, its reputation will be destroyed. For example, a bank. There are two banks. If one bank having a ATM machine and another bank have not an ATM machine, customers will usually prefer to that bank who having a ATM machine as compared to that bank who have no ATM machine. So liquidity is the biggest factor. So this is a liquidity risk for that bank who has no ATM machine. Okay, and we can say that liquidity